Welcome to Podkey Daily News, your fast brief on markets, conflict, and policy moves. A rare currency rescue just hit the yen. Iran tensions keep throwing oil around by the hour, and several governments are finding out how quickly geopolitical risk turns into economic risk. The biggest market move was a rare joint intervention by the US and Japan to support the yen, pushing it from around 164 per dollar to roughly 155. Officials cast it as support for an ally and a warning to traders betting against the currency, with some reports putting the operation near $10 billion, though estimates vary, and Japan has spent far more on solo interventions before. Why it matters is broader than FX. A collapsing yen raises pressure on Japan, either to hike rates hard or sell large amounts of US treasuries, and both paths risk driving up global borrowing costs. What to watch next is durability. Analysts still doubt this holds unless Japan backs it up with more meaningful rate or fiscal shifts. On Iran, President Trump reportedly twice halted or reversed large planned strikes after mediation and pressure from Gulf allies, opening space for possible Qatari or Omani-backed talks. Markets reacted instantly each time. Brent crude fell back to the low 80s after strike cancellations and diplomatic optimism. But earlier spikes pushed prices above 100, which tells you how sensitive the market still is to every headline around Hormuz. This matters well beyond energy traders. Higher oil quickly feeds into transport, airline, travel, and consumer costs. And lower prices on diplomacy show how much of this move is risk premium rather than supply loss. Watch whether talks actually formalize and whether either side breaks the pattern with a larger retaliatory step, because the market is still trading this crisis one decision at a time. There is also a strategic knock-on effect. Gulf states, including Kuwait, are questioning whether large U.S. military deployments still protect them or just make them bigger targets for retaliation. At home, the politics are getting tighter, too. A Reuters Ipsos poll put U.S. public support for the war with Iran at about 1/3 in early August, with rising energy costs and unclear objectives adding pressure on policymakers. The economic spillover is already showing up in company results. Marriott said revenue per available room fell about 43% in the second quarter, tying the hit to weaker travel amid regional tensions, and the stock dropped about 7%. OPEC has tried to steady the market with a modest production increase, but as long as regional risk stays elevated, sectors like hospitality and travel remain exposed to another round of price shocks and booking pullbacks. In the Russia-Ukraine war, a drone attack on a Black Sea resort in southern Russia killed 7 civilians, including 3 children, and wounded dozens, according to Russian authorities, who called it terrorism. Separately, Ukraine has stepped up long-range strikes deeper inside Russia, hitting economic and logistics targets, including oil refineries and a Wildberries warehouse, part of Kyiv's effort to impose costs away from the front. The practical point is that the war's strike zone keeps widening, with economic infrastructure increasingly part of the battlefield and civilian risk rising alongside it. Russia is also adapting on the energy side by reportedly building a shadow fleet of LNG tankers ahead of the EU's 2027 ban on Russian LNG imports. The playbook looks familiar from Russian oil shell company ownership in places like Dubai and Hong Kong, flags of convenience, jammed or disabled tracking signals, and ship-to-ship transfers to hide cargo origin. If this scales, enforcement gets harder, and Europe's effort to squeeze Russian energy revenue gets more complicated. In Washington, Acting Attorney General Todd Blanche rescinded a controversial $1.8 billion anti-weaponization fund that had become a flashpoint in his confirmation path. Senators John Cornyn and Tom Tillis wanted it cleared before advancing his nomination, and reports said the fund included provisions shielding the former president and his family from past tax audits. That removes one major obstacle, but it does not settle the broader fight around Blanche's nomination. On public health, the Democratic Republic of Congo has reported more than 3,600 Ebola cases across 49 health zones, and the WHO is planning to expand treatment capacity from about 900 beds to at least 3,000. The near-term global transmission risk is still described as low, but the scale of the outbreak makes local containment and community trust critical. In the U.S., a cyclosporiasis outbreak has now been linked to 2 deaths in Michigan, the first fatalities in that outbreak, underscoring that foodborne parasite infections can turn severe, especially for vulnerable patients. Climate stress is also moving from abstract risk to operational disruption. Greece faced more than 220 fires in a week under extreme wildfire conditions, while the Danube fell to its lowest level in 30 years. That low river level forced partial shutdowns at Hungary's Pax nuclear plant because it depends on river water for cooling, a clear example of heat and drought directly hitting critical infrastructure and power output. A few corporate notes with longer-term implications. Novo Nordisk says Wegovy became one of the fastest U.S. drug launches ever at roughly 3 million prescriptions, but it still expects sales and operating profit to fall by 2026 as competition intensifies, especially from Eli Lilly. Base Power raised $1 billion at a $13 billion valuation to expand home battery installations, a sign investors still see strong demand for distributed backup power as grid resilience becomes a bigger consumer priority. And Ford is sticking with its high-margin playbook, focusing on vehicles like the F-150, Mustang, and Bronco, while largely staying out of low-margin small cars, because U.S. demand is still concentrated in larger vehicles. That's the brief for now. Thanks for listening to Podkey Daily News. This episode was generated by Podkey. Create your own at podkey.fm.